Welcome to today's market report. European stock markets are seen opening largely unchanged on Thursday, pausing for breath while waiting for more news about COVID-19 vaccine approvals, as well as Brexit trade negotiations. DAX futures traded 0.1% higher, CAC 40 was trading less than 0.1% higher, FTSE 100 fell 0.1%. Global stock markets and those in Europe are no exception, have seen strong gains on the idea that vaccines to combat the COVID-19 virus are coming shortly, returning the world's economies back to some form of normalcy. On Wednesday, the UK became the first country to grant emergency approval to the Pfizer-BioNTech vaccine. The US and Europe are expected to follow the short order, while drugmakers Moderna and AstraZeneca are also seen shortly offering up their products for approval. This was positive economic news earlier in the day, as the Kiting Services Purchasing Managers Index for November came in at 57.8, beating expectations and showing the Chinese economy is well on the way to recovery. The equivalent European figures are due later in the session, but are unlikely to be as upbeat given the restrictions in place throughout much of the continent over the last month. Another potential fly in the ointment could be the negotiations surrounding the future trading relationship between the UK and the EU after the end of the post-Brexit transition period on 31st of December. France warned on Wednesday it could veto a trade deal between the two parties if it doesn't like the terms. A move that could mean trade with the UK next year would become subject to tariffs and quotas. In corporate news, the French telecommunications company Orange announced plans late Wednesday to launch a takeover bid for its Belgian subsidiary Orange Belgium, valuing the unit at 1.3 billion euros. Oil prices edged lower on Thursday, weighed on by continued uncertainty over whether a group of leading producers will extend record production cuts that were made to balance out the severe hit to demand from the pandemic. Crude futures traded 0.2% lower at $45.20 per barrel. Brent was largely flat at $48.28 per barrel. Gold futures rose 0.3% to $1,836.50 per ounce. On the FX front, GBP/USD gathered pace to take on the recovery above 134 heading into the London Open, as the market shrugged off looming Brexit concerns amid persistent US dollar weakness. The greenback continues to bear the brunt of the increased demand for riskier assets, as optimism over the coronavirus vaccine and the US fiscal stimulus continue to play out. The UK regulator approved Pfizer's vaccine on Wednesday, which will be available from next week, whilst the US Congress showed its willingness to discuss a much larger fiscal aid package, adding to the prospects of a quick economic recovery. The overall market optimism overshadowed the ongoing Brexit developments as the cable staged a solid comeback from slump to 132.89 reached in the US last session after the EU's chief negotiator Michel Barnier warned that a deal hangs in the balance. Differences continue to persist over the key sensitive issue of access to the fishing waters, although both sides continue carrying out intensive negotiations, with a deal likely to be reached this weekend. On the level playing field provisions, Barnier said the common ground was slowly being found. The continuation of the upside momentum in cable is predicted to meet a tough barrier in the 135-135.15 area, according to the Commerzbank. This is a long-term pivot and both levels represent major resistance. We would allow for them to hold the initial test, according to them. Nearby support is offered by the 55-day moving average at 130.65 and also by 130.09. The 5-month uptrend, and for now, while above here, the market remains bid. Eurodollar sets a new 32-month high above 121.20. Broad-based dollar sell-off and a slowdown in coronavirus across Europe has propelled the pair going higher, trading near 121.24, the highest level since April 2018, having charted a convincing breakout above 120 earlier this week. The pair has hit a 32-month high for the second consecutive day and is now up 8% on a year-to-date basis. According to BK Asset Management, the pair euro-dollar is being driven higher by the bearish US dollar sentiment, a slowdown in the coronavirus cases across Eurozone, stronger Eurozone data, and the stock market rally. The dollar continues to lack friends in early European trading session, with optimism over the rollout of vaccines and talk of new stimulus package prompting risk-on trades. The dollar index was down 0.2% at 90.925. This is today's market news. Thanks for listening. We'll see you next time.